Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you all on this Tuesday during market hours, especially, and with Rob Roy, who I'm just going to be introducing here in just a moment. First and foremost, we have to cover off our disclaimer agreement. If you've attended any of our live sessions or webinars before, and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is available on our website at all times, so please feel free to read this in detail at your leisure, or feel free to take a screenshot of it now if you like, but that's the main point to take away from it. Other than that, the market seems to be in a bit of a pause mode heading into the all-important PCE report on Friday, as we discussed yesterday in our EWO Trader live session, along with the first presidential debate that's going to be Thursday night, I believe, and I'm very excited myself to watch that and hear Rob's thoughts on the overall impact that might have on the market. So without further ado, let's introduce the man of the hour, Mr. Rob Roy.
Howdy, Zach. Good afternoon to you. Good afternoon to everybody. Thank you for taking part of your Tuesday afternoon trading to be with us. As you mentioned, all eyes on the PCE report. Seems like the market is just kind of turning sideways here. A couple of things to talk about as we look at the chart of the markets. Number one, we did run up, as I talked about in the weekend U.S. market update, right to the 61.8% fib extension level, a logical point for resistance, along with looking ahead for that PCE report. Zach, you mentioned yesterday during our EWO Trader Live, I had talked about the fact that we had this pattern of opening lower and closing higher. And then yesterday we opened higher and noted that it'd be interesting to see where the close was, as we do that show at 11 a.m. To see if we close lower, and close lower we did. We actually closed on the low of the day. So just wanted to update everybody on that. And we kind of have the same pattern going on, at least so far today, where the high of the day was just past the open and we're trading lower at this point in time. However, if we take this off and look at the moving averages, we put the 10-day moving average on, you can see we still are sitting on top of that 10-day moving average. So even though it feels like perhaps there's a little bit of weakness in the market, all in all, it's about what you would expect going into another big inflationary report. If you've been under a rock somewhere and aren't aware, the PCE report, personal consumption expenditures report, is the Fed's favorite measure of inflation. So all eyes will be on that Friday morning. And of course, we have the presidential debate, as you mentioned, Zach, Thursday night. So back-to-back news. I don't know if the first presidential debate could impact the markets that much. I'm sure in the crypto world, they may be looking for some nuggets coming out. President Biden, that was so against cryptos and the Ethereum ETF, et cetera, seems to have warmed a little bit to it. And that's because that's where the prevailing optimism is in crypto land. And then, of course, former President Trump has been really a proponent of it, even accepting campaign donations through crypto. So I think it's going to be more interesting in the crypto world for the debate, possibly, than the equities markets. But that's where we sit, just kind of meandering sideways here. You can see that we are a little separated from the 50-day moving average, but not significantly so. Had we continued higher, I would have been concerned about both the fact that we were starting to get a little more vertical than 45 degrees in the market, and that 10-day moving average would have had a little more separation from the 50-day. That's the other side of the coin. You've heard me talk often about no security in any time frame gets very far away from the 10-day moving average, but we don't get a lot of separation between the 10 and the 50 either. And when those tend to separate, they come back together. But you can go back and look at the big rally that we had in the earlier part of the year and see that we maintained pretty much a status quo on the separation. And we aren't too far away from that, maybe just a little bit. We had this little tip down here, and the 10-day moving average came down a bit. So we're maintaining a pretty good corridor here. So I don't think that's a concern. I really think that the most important detail of the week will be that PCE report on Friday morning. So we'll keep an eye out for that. We got to look at rates. Rates have been cooperating, continue to just hover right around that 100% extension on that zigzag pattern. as I noted in the weekend report, as well as the EWO Trader Live webinar yesterday, we had this relabeling of the 10-year chart. We had a 5-wave pattern to the upside, and we didn't want to see interest rates go up that high. Certainly would have been difficult for the markets and definitely tech land, and that did relabel. It did go away, and so we've completed this downward zigzag. Now we just wait and see what happens here. Do we just go into another corrective pattern here, perhaps a flat, or do we bounce back up here and then head lower down to the 161.8% extension? That's what we watch here. But as far as right now, the zigzag's done what it's supposed to do, which is go to 100% extension. There are times when we get the extended level down to 161.8, but normally when that happens, you bounce back to the previous fib level before. Doesn't always do that, but it does that a high percentage of the time. So I've just been saying, and I continue to believe, that just staying in a range right through here is constructive for the markets. And the reason I say that is if we were to come way down here to the 161.8%, get rates that low, I think that would indicate a lot of very weak economic data that has come out. And we don't want to see that. We want to keep the economy kind of status quo. So I think the Fed's pretty happy right now with where things are, and looking forward to maybe a non-event on that PCE report that could spur another leg higher in the markets. If it is tame, if it comes in hot, all bets are off, and then we start looking all over again to see if we start hearing whispers of a rate hike, which we did 2 months ago, and then with last month's economic data, including the PCE report, coming in a little tamer than expected, inflation on the CPI and PPI, then we had that go away. All of the whispering about a rate hike went away, and now we're just waiting for the next direction from the Fed, and they'll take the guide from that PCE report. Looking at the dollar, we had a move to the upside in the dollar, but we're maintaining that trading range right in here between 104 and 106. I think that's also constructive for the markets. I do think that if we do go up to this wave 5, and it's interesting that the dollar moving up is pretty much in the same time frame as where the S&P move to the upside is. I'll come back here and show you both of them right before the election, showing their wave 5 highs. The other thing on the S&P while I'm here is that we did hit the bottom of that tap box, but question will remain, do we move up to the midpoint of it moving into the election? So it seems like the fireworks of the market are over, and if we move up, other than perhaps some volatility on Friday, one way or the other, things seem to be in a little bit calmer space as we move into the election. So let's take a look at the DIA. Had a little bid the previous couple days, moving down today. So we relabeled this. We took this downside zigzag off because we took out that A wave high on the DIA, and now we're back down testing that, as well as testing the 10, 30, and 50-day moving averages, which are all converging at the exact same spot here. We did hit, as you can see, yesterday on the high, the 100% extension. So moving down makes a lot of sense. And we have come down, and what I was just talking about with testing the previous fib level, that works to the upside as well. Just talking about that on the TNX. But we've come down here to the 61.8% extension, which means if the Dow wants to, it's in a place where it could go up now to that 161.8% extension. It will probably bump its head a little bit right here around this previous wave 5 high, even if it breaks above 100%. But it seems like if we are able to put a little bit more distance from that A wave high and test that previous wave 5 high, then perhaps we do go up to 161.8. So just taking a little pause on the Dow today, but still staying above all of the primary major moving averages. So a little change there that I wanted to make you aware of. Looking at the Qs, we had a much needed move back, in my opinion, right up to the 61.8%. fib extension, which is what you would expect down here with this B wave right around the 38.2% fib corrective level. Remember, a 38.2% correction yields an expectation of a 61.8% fib extension. So the extended level here for the Qs would be on up to the 100% extension. And if you didn't see the U.S. market update, I encourage you to go look at it. Posted over on Yahoo on the Elliott Wave Options channel. We talked about how this Wave 5 had been quite extended, and it was expecting a relabeling here back to a 3, or it was going to be one of those rare times that we had a 261.8% extension, which has happened, but doesn't happen very often, and we got a relabeling here. So the Q's back to a Wave 3. Got a little bit away from the 10-day moving average, and so we're back here at the 10-day moving average. Something to note, we did close below it yesterday. We're staying right here. Nvidia is showing a little bit of a bounce back today. We'll get to that here before we get to the Q&A. I'm sure people have questions about that anyway. But this is a much needed pause, I think. So we'll see if we can hold this 10-day moving average here. Perhaps we just go sideways for the next couple of days until we get into Thursday night and Friday morning. Or maybe there's some anticipation of a good Fed report. It seemed that way at the open yesterday as the market opened higher, but again, that went away and the markets closed on their low. So reversing that trend that I had mentioned before. Let's look at the IWM. And not a whole lot going on here. We just seem to be pegged right at that 200 level, right at the midpoint between the 190 and 210 trading range that we've been in since, gosh, the entire year. Basically, back in that 190 to 210, we got away from the 170 to 190 range, broke back above 190, and that's hell as we've tested it a few times, and we're moving into a triangle pattern here. So we had this smaller descending triangle, and that is kind of morphed into a larger descending triangle. So we just move that line down and then extend this one a bit further. And you can see that we still have a descending triangle on the IWM. It's just a bit larger. That happens at times. Sometimes you get a decently formed triangle and it's not done yet. It needs to form a larger one. If you have a strangle on, that can be a little frustrating because it takes time. And time decay can be an issue there, but you're normally rewarded in the end because when it forms a larger triangle, you normally get a larger breakout. So the patience on waiting for the breakout gets rewarded with a larger and oftentimes stronger move from the triangle. But 200 is the key that we have to continue to watch here on the IWM. Can we hold that? Can we run back and try and test 210 again? Or are we going to give up the ghost here and move back down to 190. I find it interesting that basically this triangle is 10 points wide. And if we were to break from 200, that takes us right up to the 210 level. So a breakout of the triangle to the upside would test the upper trend line here. And a break to the downside brings us down to 190, which means we're testing the lower end. So it does look like we're going to break from this 200 level on the IWM. But as always, with triangles, you don't know what direction. Could be to the upside, could be to the downside. We just wait and see. I've talked about this numerous times. Unlike all of the data that you may read out on the internet about a descending triangle breaking lower and an ascending triangle breaking higher, all the triangles have the opportunity to break either direction. There's just no data that supports that. Triangles break out, period. That's it, and you don't pick a direction. But it really is interesting that whichever way we move, we're probably going either to support or resistance, and that's the next level. So it'll be interesting to see which way it breaks and how that plays out, but it's set up really well for a move one way or the other. So expect some action on the IWM here in the not too distant future. All right, now let's go ahead and look at the VIX. Did leave the VIX out in the U.S. market update. I'm trying to be aware of people's time and not get those recordings to be too long. So oftentimes we kind of substitute things and the VIX got left because there's really nothing going on with the VIX. We're holding here at that 12.5 level, bounced up a little bit, and now we're just trading right around the 50-day moving average here on the VIX. It does leave a little bit of room for a rally just to get back down to 12.5. And as a reminder, we have had times historically where we've gone into single digits on the VIX, coming out of the great financial crisis, the GFC. With that rally, we got down into single digits. So it can go lower than 12.5. Just because that's been the support the entire year doesn't mean it has to continue to be that way. We don't have to just jump to the upside. Again, we could. Anything could happen on Friday. So we were talking about this same thing last month, that all eyes are going to be on that report, and it's going to move the market. It did last month, and I think it will again this month. So do we bounce higher? But we've done everything we need to do from this triangle. We had the expanding triangle. We broke out. We came back. We tested the midpoint of the breakout. All of the rules around triangles have already been done. So at this point, we're just kind of watching the VIX and letting us know which way it's going to go. The VIX was down earlier, bounced back a little bit, but for now, we're just kind of in this range. We're at 13, you can see 13, 14, somewhere in that area on the VIX. So not a whole lot going on with the VIX, but I did want to update you on that since I didn't put it in the U.S. market update. All right, I mentioned in the intro, Zach talking about the presidential debate, and I've already talked about how Bitcoin, I think we'll be watching it. But we did get down yesterday, perilously close to breaking below that 60,000 level. We did test it at that all-important 60,000 level, and at least today we're bouncing up, but we'd gotten away from the 10-day moving average. So yesterday I was mentioning that a little bit of a bounce is probably warranted here. One, because we're at a support level, and two, because we'd gotten a little too far away from the 10-day moving average on the downside. If you watched our crypto show over on the Hub Financial channel, and that's also on YouTube, you can go to Hub Financial, register there. We do a live crypto show on Fridays, and we were talking about the potential for this inverted or inverse head and shoulders pattern that could really be setting up. There's the left shoulder point. Here's the head. And I was mentioning that yesterday. We didn't want to take out that low. We got awfully close yesterday. And now we're bouncing back up. So that could hold as the left shoulder point. And then we move back to the upside here. And that could spell a significant rally for Bitcoin and the crypto world. But we have to hold this 60,000 level. And one day doesn't mean anything. We need a few more days. We need to bounce back up. We need to touch that 10-day moving average, get above it, and more specifically, get back above that 50-day moving average, because we have had a bearish cross here between the 10 and 30-day moving averages. So if you're long or watching Bitcoin, you already know this, but you got to watch that 60,000 level, see if we can hold there and bounce back to the upside. So I expect maybe Bitcoin to move around a bit Thursday night as the commentary and the questions come out in the debate. Looking at Ethereum, Ethereum did break below 3,500, and we did have a confirmation day yesterday, which was a little concerning if you're long Ethereum, to see if we are going to come down to 3,000. We're getting a little bounce in Ethereum today as well, but once again, we were oversold on the low yesterday, too far away from the 10-day moving average, and trying to bounce back up there. But Ethereum needs to not just test 3,500, it needs to get back above it. And same thing here, it needs to get back above these major moving averages before you can feel a little calmer about Ethereum. You have to keep in the back of your mind that 3,000 is a possibility here, testing the lows from that descending triangle. And here's a perfect example of what I was talking about. On any triangle can break either way. We had a large descending triangle in Ethereum, and the break was to the upside, not the downside. So any triangle can break either direction. And that's where we've been focusing at EWO Trader this week. We sent out a new alert yesterday on a triangle. That's the place to be right now. When you have the market consolidating, potential to move up or down, you get a lot of consolidation patterns. There's over 150 of them that showed up on my search. Some of them are duplicates as far as ETFs, et cetera, but there's a lot of activity there on the setup with the triangles. And I'm going to show you one that I was going to give you today as our case study consideration, but we're one day too late. But you'll see it. I had written it down I'll just go ahead and show it to you now while I'm talking about it, because this obviously won't be it, but it was going to be on MHK because it was well set up in a triangle pattern. This is why we like to look at those. There you go. It formed a nice symmetrical triangle, and there's the breakdown today. So one day sooner, and we could have had a really nice move. But that's the way it goes in the world of trading. So this will not be our case study consideration, but it does show why we're looking at triangles right now in the volatility strategy, the volatility portfolio at ewotrader.com, because that's where the action is going to be, I think, for the next couple of weeks. And you don't have to pick direction. That's the great thing about them. Just let it decide which way it wants to go. So I threw that in there now a little bit early because we'll look, we got something else to look at for our case study consideration for this week. Taking a look at USO for oil. We'll look at the metals as well. You can see that we kind of consolidating here. We needed to. We got separated from the 10-day moving average on the upside here on oil. I've detailed this zigzag enough times, I think. All classic Elliott wave stuff with the zigzag, the extension, testing the previous level, going back to the point of the triangle. Everything that was supposed to happen happened. Right now in oil, we are in an impulsive move to the upside, and the A wave is the hardest of all waves. If you're familiar with Elliott wave, you know that every 5-wave pattern starts with a zigzag. So that's where we are right now. We're in the A wave of a new impulse. Hard to figure out where the A wave is going to end, so you let that play out, and then you look for where the corrective move is. So perhaps we get a little bit more downside move here out of USO, form that B wave, wherever it is, that'll give us our C wave extension target. So for now, you just keep an eye on oil, watch it, see where it goes. Gosh, I'd like to see it get back below this 77.5 level. Not feeling too good at the gas pumps right now, as I'm sure all of you that still have gas-based cars, carbon-based emissions vehicles that are soaking up a lot of funds at the gas pump. You're in Electricville, you don't really care. And speaking of Electricville, let's go look at Tesla. And we are trying to do something here to an upside breakout, but it just can't gather momentum. We have a bit of an arrow formation here, and that's when we had this sideways consolidation, and then we moved into a little bit of a symmetrical triangle. So it just looks like an arrow. And it breaks out. It's not a huge breakout. So we're from like 160 to 180, about a 20-point move. But a 20-point move is coming in Tesla. No way to know which way. And interestingly enough, just like the IWM, an upside breakout pretty much just takes us to resistance at 200. And a downside breakout brings us down to support in this 160 area. So even when it breaks out of this little triangle, it isn't going to give us a longer-term directional move. So I think you just watch Tesla right now as well. Let it break out, and more importantly, let it either break above 200 or down below 160, and then you have a directional trade. But for now, you just have to watch it, or you're just guessing on which way it's going to go. If the triangle was larger, you could look at doing a strangle, something like that on Tesla. It's just not quite large enough for what it would cost to put the position on. All right, I did mention that we would talk about Nvidia. We will look at a couple of the international markets as well as we take a look at Nvidia. Not much needed rest here. Once again, the rules that we talk about time after time. We got too far separated from the 10-day moving average. We were starting off on a bit of a 45-degree angle here, and then the whole FOMO thing came in, fear missing out. We went a little too vertical, and we got a little too far away from the 10-day moving average. So we came back, had a nice little correction, and Nvidia is enjoying a good day today, but look at the high. It's only touching the 10-day moving average. So don't get too excited yet. This is just an oversold bounce right now. Back to the 10-day moving average. We'll have to see what Nvidia does over the next couple days. I think the most constructive thing for Nvidia would be a couple sideways days here. Let's go sideways for a couple days and then see if we can resume that upward move, possibly after the PCE report on Friday. But Nvidia is its own animal, and that's all anybody seems to talk about now. So it could take off before that, as well. I'm just saying I think the most constructive thing for it is let's consolidate this move a bit. So a little more sideways here and then take off. I think that has a better chance of holding longer term if that's the scenario that plays out. Now, if that PCE report comes in hot and all of a sudden we're talking about rate hikes again, et cetera, or concerns about it, we have this gap basically got filled here, but we still have this one down here. And we all know the gaps get filled high percentage of the time based on our AI data, but we don't know when. Could be sooner rather than later. It could be well off into the future when the market finally does give a significant correction that we get that gap filled. But it has to be in the back of our mind if the PCE report is hot and the market starts heading lower on fears again of the Fed talking about rate hikes. All right, so let's look at a few of the international markets. We look at Australia. So we'll look at the EWA here for the Aussie market and just forming a nice triangle here. This actually could be something really to watch. We are in a qualified upward zigzag pattern, the B wave right at a 50% correction. So we have a complex C wave here. And when you have a pattern within a pattern, that gives you a complex wave. So we came down here and now we have this pattern of lower highs here down around the 24 level as far as support. So I'll just bring this line right up here, and there you can see the formation. And even within that larger descending triangle, kind of a little formation here on the symmetrical triangle within a descending triangle, which is very similar to the pattern that I sent out as an alert for our volatility portfolio alert subscribers yesterday. A triangle within a triangle normally tells you that a breakout is coming. So we have to watch 24 on the EWA. Can we stay above it? We have managed to get back above all the major moving averages, the 10, 30, and 50 that I have on the screen. Can we hold that? Can we stay there? That's going to be the key to watch. And then Canada, which was struggling, and I had a comment come in. This is one of the great things about the community at ewotrader.com is one of our subscribers. I was talking about, I'm not sure what's going on in Canada, told me something that I wasn't aware of, that the government in Canada had passed a capital gains tax. So it goes into effect on June 26th, so that's tomorrow. And obviously that's going to create selling pressure. People are going to take gains moving into that so that they can avoid that new capital gains tax. So that created some selling here. That's what was going on with the Canadian market. Isn't it interesting that that news comes out and we were in a symmetrical triangle? That gave us the downside breakout. Sometimes a news event will trigger the breakout of a triangle. So we're talking about a lot about triangles today. But as I said, that's where the action is, I think, for the next couple of weeks. And it doesn't have to have a news event, but it's just odd how that seems to happen a lot, that almost like the market knew something, something's about to happen, something's about to come out. And so there was selling in front of that. That seems to be absorbed now. We're back above this 36.5 level, trading 36.91 right now. We're back, if we could close here, above the 10-day moving average. So past couple of days, bit of an oversold bounce from the 10-day moving average. Once again, need to get back above the 50-day moving average if we're going to move higher. But we get all of that pre-capital gains tax selling out of the way, and then the EWC can go back to what it normally does. So we love interacting with our subscribers, and that was something, as I mentioned, that I wasn't aware of. So it's great having international subscriber base as well. We find out things that are going on around the world. Now let's look at Germany, which had corrected after I said, I'm not sure what's going on there with this big move to the upside. Well, we had this big corrective move. We're right down here to the 61.8% correction, which is where we're supposed to go because the wave 5 went above 100%. Remember, if the wave 5 extends more than 100%, you don't go back to the previous 4. You correct 61.8%. And that just happened to coincide with those lows back in April. So it was a good support level. The same scenario here. we'd gotten a little too far from the 10-day moving average on the low here, and now we are looking to move back up towards the 10-day moving average. We tapped it on the high yesterday, trading below it today. Can we get back above the 10-day moving average? Little bit of separation here between the 10 and the 50, so maybe things calm down a little bit here in Germany. Maybe this acts as support here for a little bit longer on the 30 level, and then we'll see if we can go ahead and move higher from here. So we'll all eyes on the 30 level and whether or not we can get back and close above that 10-day moving average and then move to the upside from there. And then India, let's take a look at what's going on over there. It's been in a world of its own. We did have the election stuff that occurred, which created really wild volatility right through here. We had the gap up and then the gap down, and then all that just went away. So 2 days of really wild volatility and then just marching back to the upside here. Now we're at 135% extension, so we're starting to get in that area. Not quite there yet. Once we get, if we do, to 161.8% extension, we'll be having the same conversation we had with the Qs. Does that relabel to a 3, or is that the end of it? But a little ways to go yet here from that level at 135%. So India right back doing what India has been doing for, gosh, going all the way back to the lows in November last year. Just been marching higher, went through this great consolidation through here, had a nice flat pattern that then took off into a zigzag pattern. This kind of messes up the patterns as wild volatility. So we'll just say that we're in a new impulsive move here in the INDA as well, and see where that ends up playing out. So that's a quick rundown of what's going on internationally. Let's take a look at our case studies that would be considered still open if you were following along with what we've looked at. We did AXTA back on the 7th of May, and it was hanging in there really well, but breaking to the downside today. The key level here, the line in the sand, is right at this 32.5 level. So we have to watch that and see if we can hold there. We are looking to follow through with this early breakout from that symmetrical triangle. So it does look like 32.5 may be in the cards. And if it gets to that, then you have to also start wondering, well, if we're going to come down that far, are we going to come down and fill this gap? So on this one, let's watch it. If we get follow through, I think you take that one off, call it a loss, and just move on to the next one. We've had a high percentage of winners here at TradeFinder. If you've been with us for the past few years, you know the percentage of wins is really up there, and very small number of losers, but this could be one of them. This could be added to it. Then we also had GDX. The miners had a little bit of a bid yesterday, going right back down today. You can see we bounced up, closed right on the 30-day moving average, which I don't use that so much for support resistance. I use it with in conjunction with the 10-day moving average for those crosses. That gives you an indication of where things are likely to go over the short to intermediate term. And we're just consolidating now on GDX. So I think we hang in there here. Obviously, it's going to move on Friday. Perhaps it doesn't do much before then, but the metals will probably move along with interest rates, along with cryptos. A lot of action is going to be going on Friday. So keep an eye on the markets Friday. It's going to be a volatile day, in my opinion. Maybe it turns out to be nothing, but it's sure set up like a lot of action is going to occur on Friday after that PCE report, and then we will have had the election commentary as well. And then we also last week looked at EWT. That was the ETF for Taiwan, and we didn't quite have a high enough score on the AI, but it was interesting. We had a target price of 56.22. We didn't quite make it yet. We got awfully close the very next day. So Wednesday last week, we got up to 55.40, call it. So it was getting in the neighborhood, and that also got us a little bit away from the 10-day moving average. See all these cool tools with the software? If you're watching and you're wondering what I'm using and you haven't heard me talk about it before, go to hub.com and get a copy of this software. A lot of you have been posting comments on the U.S. market updates that you've gotten it. It's free. It's in beta form right now. There's nothing to download onto your computer. It's all browser-based. I think it's the coolest software, and they continue to add new features as we go through the beta form before it goes into the official launch. So you've seen me using them in addition to the best Elliott wave analysis, in my opinion, that exists. I'm a big Elliott wave fan. I have been since 2001. I'm going to use the software that I think is best for Elliott wave and forget all the rest of the little cool gadgets and tools that we have here. I think it's the best for Elliott wave as well. So the EWT got a little too far from that 10-day moving average. We come back to the 10-day moving average here. We're bouncing up. All that looks good, so I think you keep that one. So I think we hold GDX and we hold EWT and we watch AXTA closely. If there's a follow-through downside day tomorrow, then I think that one comes off as a rare loss. And then we just move on for looking for case study considerations into the future. All right, so that's kind of the rundown of where we are. I do have a case study consideration for you to look at today. Zach will be back a little bit to show you how to input that. One of the other cool features of the software is the social aspect of it, where you can post your own ideas. Other people can go in and vote. It's really cool. Great community of. We're adding new people all the time that are posting ideas or just posts. That's something that you might be looking at. I'll let Zach go through. He does a great job of explaining all that. But what I wanted to show you, this one showed up on my search. It has not showed up on the AI. But when I look at this pattern, you can see that we have a really nice zigzag pattern to the upside here on Microsoft. So I'm going to put in the DMI here. You can see a very constructive looking DMI where we are sitting here with the ADX moving up above 20. That's a key indication. There's good separation between the two directional indicators. We're getting a little tick down in the positive directional indicator, but that's kind of normal because we are consolidating here. The key is that the negative directional indicator hasn't ticked up. So the fact that the positive is coming down just means that the buyers are taking a breather here, but the sellers are not feeling emboldened enough to step in. And just classic with what normally happens when you consolidate sideways. So I think this is giving us a pretty good entry, a very interesting entry here on Microsoft. And then I'm going to go through and draw you the zigzag pattern that I'm looking at. And I think this is what makes this really compelling here. You can see that we're right at the 61.8% correction on the B wave. We also extended to 100%. Now, I want to be clear, that's what's supposed to happen on a zigzag pattern. If you go to 61.8 on the correction, you're supposed to go to 100% on the extension. But oftentimes, we will extend to the 161.8% level. How do you know if that's going to happen or not? That's where I incorporate the DMI as one of the primary confirming indicators to go along with Elliott wave. So when the zigzag's already completed, is that it? Is it done? Well, the DMI would tell us that, hey, that's about it. We would see these two directional indicators a bit closer together, probably a little rollover in the ADX, and that would tell us that that's likely the end of the move. It's not showing us that. It's showing us, the DMI at least is telling us, hey, we've got a pretty good chance of moving up to that 100%, 161.8% extension. So how do you trade this? You know, I always like to give both conservative and aggressive commentary. We all have different risk tolerances. You know what yours is. If you're more aggressive minded, I think you take a shot at Microsoft now and see if we do break to the upside before Friday or after that report comes out on Friday. If you're more conservative, then you want to wait, let it break above this 100% extension level, and then trade the rest of the move up to the 161.8% level. So it's kind of where you are with your own risk tolerances as to whether or not you wait for confirmation that we're heading up here, or if you come in with a little more aggressive stance now. But I think based on at least the way the DMI looks now, That's something that you could do. And then where would your stop be? Well, your stop would be this A wave high. If we were to break that, you can see that we had consolidation back here in March and April, just under that A wave high. We don't want to see it come down and test that again. So if we start to break the 10-day moving average and head back down towards this A wave high, you would just exit the position. So we'll keep an eye on that as well. But Microsoft is going to be our case study consideration for this week. So I'll mark that down, MSFT, and put a little asterisk by it if you want to wait for that break above 450. But it looks like it wants to go to 475. Again, based on what the DMI is telling us, giving us good confirmation there that might be highly likely to happen. All right, Zach. So with that, we got some time for some questions before you show the folks how they can go in and post an idea. And we'll post this
like a great plan. Thanks for an insightful presentation so far. And I know we went over GDX. Did we cover GLD and SLV? Apologies if we did. I've been doing a bit of multitasking per usual.
I did not. So we'll bring up the metals, look at both SLV and GLD. So taking a look at SLV, looked like we were bringing to the upside, and now we're right back to the point of the triangle. So is this a false breakout? Talking about triangles, and we've really talked a lot about triangles in this session, there's three primary ways they can break out. One is they just break out and take off and run. The second thing that happens could be what's going on now, where you break out, you come back and test the breakout, and then you move on. I think that's a little more likely because you can also see that we have these two zigzag patterns along with the wave 5 forecast all around the same spot. Now we did hit that wave 5 back here, so you could say that, well, that's already done, but these two zigzag patterns are not completed yet. So we could be running back up to test that wave 5 level on the SLV. I think that's more likely, but there's also the third possibility on a triangle is that you get a false breakout, head fake, if you will, and then the big move is the opposite direction. And if we take out this B wave low, and we're getting awfully close to it today, if we take out that B wave low, it's a strong one, right, at 50%, then we're probably coming all the way down here, and you wouldn't want to stay in for that. So I think if you're long SLV, you hold for now, but we need it to bounce here pretty quickly, or at least not go lower from here. As I said, metals may be quiet moving into that report on Friday, but we don't want to see it break down and fall apart before then either. So we have to keep a real close eye on that B wave corrective level on SLV. GLD kind of was following suit here, trying to make a move to the upside yesterday, but note it's still in a triangle. So it's interesting that we have slightly different patterns here between GLD and SLV. GLD in this nice symmetrical triangle pattern, SLV in, at least for now, an upward zigzag pattern. It already broke out of its triangle. Similar, but different in the fact that there's not really the two zigzag patterns here on GLD. So you would kind of lean that maybe SLV looks a touch more bullish than GLD, but the possibility of that false breakout still exists on SLV as well. So you could look at strangles here. We do want to look at where this ADX is on the DMI, and you can see that it's getting low. It's right at 15. When the ADX goes below 15, that's where I get interested. So this is becoming pretty interesting for a strangle. It depends on how expensive the options are. Since the GLD is trading at 214, it could be too expensive to put a strangle on, but it's worth taking a look at to see. And I'll be doing that after we finish this recording, looking at this live show, and seeing if the options are conducive. Obviously, there's going to be plenty of liquidity in the GLD, but do the options give us an opportunity for a strangle? You could look at the SLV as well. The triangle's not quite as well formed on the SLV, and you have those upward zigzag patterns. So slightly different patterns, but some similarities as well between the two metals.
Very well. Thanks, Rob. We'll go on to this next question here from Alex. The yield curve is getting further inverted. Concerns, will the US dollar, Japan be a trigger? Sorry, the Japan currency is slipping my mind. Is that the
yen? Yeah, the
yeah.
Japanese yen. They they finally decided to raise rates for the first time in a very long time, getting away from their negative rate policy that they've been in for decades. So that definitely affected the currency markets. As far as the dollar, I really think the dollar is going to be there was some buying that came into the dollar. That's what occurred right here when the Eurozone cut rates. So we've got dueling countries here with their currency manipulation. I don't know if it's manipulation. Currency actions is probably more appropriate. So you had Japan raising rates, and then you had the Eurozone cutting rates. We surmised that some interest may have been coming into the dollar from the Eurozone with the fact that we haven't cut rates yet, and they have. That's been kind of short-lived and is consolidating now. So we had this big move up. And all we did was go right back to the point of the triangle. So there's another one of those triangle rule things that some sort of a news event comes out and spurs the rules for triangles. It's odd how that happens, just like the stuff that happened with Canada that I was talking about with the EWC. A news event here with the Eurozone cutting rates brought us right back to the point of this expanding triangle, which is just a triangle flipped the opposite way from what we're used to with the consolidating triangle. And now the dollar, to me, is being very constructive. I'd like to see the dollar just hang here. I think we can handle, I mentioned that yesterday as well, I think we can handle the dollar going up here, but we don't want to see it go too low. As I mentioned earlier, could indicate too much economic weakness. But I think the dollar will move a bit at least on Friday. But for now, just keeping it stable, I think is the most ideal scenario for the equities markets.
Makes sense. Thanks, Rob. Next up, we have Wigmar. Does NEO look like it goes lower, or is it going up from here? When will it label number one wave and number two? Maybe Rob can use NEO and explain rules. Thanks.
NEO,
correct. Blast from the past for you again.
Yeah. Is it NEO or NIO? Which one?
Sorry, NIO.
NIO. Okay, so the Chinese car manufacturer. Well, the one answer to the question is you don't know when the 1 and 2 are going to be labeled. Those two come in together. One thing we do know about Elliott wave rules is every 5-wave pattern starts with a zigzag. So you get the A oftentimes first and then the B. So they label, and then the question becomes, does that A and B turn into a 1 and 2? That will happen if we move into a 5-wave pattern. However, not all zigzags have to turn into a 5-wave pattern. So it's two different sides of the rules there. Every 5-wave pattern starts with a zigzag, but every zigzag that's a new impulsive move doesn't necessarily turn into a 5-wave pattern. So you have to let those label. That's how the algorithm works. The algorithm waits to see, with all of the mathematical calculations, and it's like 30 pages front and back, the algorithm, if you've never seen it, it's pretty intense. But it follows all of its parameters, and then it decides one way or the other. As you can see so far, it has not. So we finished this 5-wave pattern here, and now we're waiting to see if we start into a new, there's the 5 there, start into a new impulsive pattern. But remember that oftentimes, almost all the time, when a wave 5 finishes, you go into a correction. So there would be commentary here on this move to the upside here. That was the move back to the previous 4. It didn't have to go all that way based on the rules because the wave 5 extended more than 100%, but it did. And now we have this downward zigzag. So that's the corrective pattern, following the completion of the 5-wave pattern, and look where we held. So that's why we talk about this stuff. If you're newer to Elliott Wave, this stuff works. That's why we talk about it time after time. There you go. There's your downward zigzag. It's supposed to go to 100%, and it's just pegged itself right on that 100% extension. So the longer we go sideways, I think the better chance we have of that launch pad effect that we've talked about here in the past from the Space Coast in Florida. So kind of both my parents worked in the space program, so kind of use those analogies. But what happens when you get this real sideways correction is sometimes you can get a blast off type move, and so the launch pad blast off, etc., with the space references there. But it could also break to the downside from here, but more often than not, you'll get an upward move. Does that happen on NEO? You know, BYD was all the rage for a while, and NEO kind of got left by the wayside a little bit. It hasn't really participated too much other than this one quick move that occurred back here in May. But at this point in time, we have to wait and see because we've completed this zigzag pattern. Do we go down to the 161.8% extension, or do we hold here and get the blast off move that I talked about where we would head higher? We just have to wait and see. I know that's never the answer that people want. They want directional guidance, but sometimes the best trade is no trade. We talk to our subscribers about that all the time. You don't want to jump the gun. You don't want to guess. Trading's hard enough as it is. We put as many percentages in our favor as we can, and then we make our moves. But for now, I think you just have to watch NEO and see, can it hold here at this 430 level where it's been consolidating and then start to move. And if it can get back above that 10-day moving average with follow through, then we may very well be moving back to the upside here. And what will happen there, just to finish with the rules, if this zigzag is complete and we do start to move back higher, in other words, we take the lower move to 161.8 off the table, what usually happens is that entire C wave gets retraced. So a blast off move would give you a target price up here around 5.5. But it's got to make that move first. It's not even above the 10-day moving average yet. So patience, watch it, see which way it goes. If it breaks to the downside, I think we're coming all the way down here. We're going to test that wave 5 low. But if we hold here and can get the start of that blast off move, then you're probably going to see 5.5. So that's what NEO looks like. Yeah, you're right, Zach. We haven't looked at that one in a while.
Indeed. And I was just going to say, I wanted to highlight your sentiments on we don't want to chase the markets, right? That's very wise words, I think, to continue to emphasize, implement into these webinars for those that have been following us for some time, and those are just brand new. That's when you get into the danger zone, is chasing markets. So anyhow, next up we have Arena. Please take a look at Uber. That chart is in a 5th wave down, but there is also an inverted head and shoulders pattern.
All right, let's take a look. It isn't a qualified pattern, but it looks like I can see it's not as classic as it could have been, but a little bit of a inversion there. If this is the left shoulder, that can't be the head because the head didn't take out that low. So perhaps you're looking here as this being the left shoulder in the head, and then the right shoulder here. But really, if this is the left shoulder, that needs to be the head, so it's lower than where the left shoulder was. But it is above the 10-day moving average. It is trying to take out this wave 4. It's a pretty strong level there, 56%, so just over the 50% level. It came down and filled this gap already. I think you can stay long Uber as long as it stays above 70, and perhaps this 5-wave pattern gets relabeled and goes away. But if it breaks down below 70, I think you got to get out because who knows where it could go. The wave 5 is down there around 60, and that could come into play if we can't hold 70. So I think you watch this, and if it breaks above this wave 4, we're most likely coming back to retrace this entire wave 3, which would bring us back to 80. So you got plenty of time to trade if we do take out this level here. But if we don't hold 70, we have to take 60 into account. So keep a close eye on this one and see if it can get above that wave 4. So you can see where it opened, and then it traded higher, and now we're below where we opened on the day. Still slightly higher on the day, but below where we opened. So where does this one close today, I think will be key. But keep a real close eye on that wave 4 high there. See if that gets taken out, and then I think you have a nice upside trade to 80. Break below 70, then I think you might be looking at 60. So I would watch this one for a day or two as well. But yeah, we haven't looked at Uber for a while either. NIO and Uber.
Very well.
That's why I love doing these shows is people ask questions not always about Nvidia all the time. We get to look at some other stocks every now and then.
Nice to switch it up every now and then. And I was going to say we are coming up here on time, so we'll do 2 more symbols here, and then I will switch over to the platform and show everyone how to post the idea, do a quick little demo of the platform and feature functionality. I do want to pass through this comment here first, though. Says, "Yo, boss, love your content. Been a sub for about a month now. Where's the hat?" So I guess we're missing Trader Chuck's hat. Need to bring that back.
Good. Every now and then I'll do it on TradeFinder, but it's always going to be on the U.S. market updates. But yeah, try not to bring it out too often. But thanks for the reference. I appreciate it. And thanks for the comments.
Yeah, lots of positive feedback to follow, so we do appreciate that. All right, let's check out what's going on with Coin.
Coinbase. A quick Chuck story since I brought it up on the recent travels and on the U.S. market update. I took a picture of Chuck Norris's house in the Bahamas, and when I was in the Bahamas, a gentleman came walking over to me. I didn't have the Chuck hat on; I just had a regular hat on. He was obviously a Bahamian citizen, and he was walking by on the beach, and then he stopped and he looked at me and he goes, "Walker, Texas Ranger, is that you?" And so even without the Chuck hat, I still get those references. So it's crazy. Is that really you? And I get, at first I just thought it looked like, but then he has a house there. So I guess it made a lot of sense that it could have been. But looking at Coinbase, it looked like we were playing some catch up here. Coinbase, Bitcoin doesn't have to go up for Coinbase to make money. It's just trading, right? And that seemed to be making sense. The 5-wave pattern has gone away. It's relabeled. So we have to watch that. Are we going to come back down here and test 200? We got a little bit oversold with Bitcoin and away from the 10-day moving average. So the bounce today, I think you have to just remember today doesn't mean anything. It's an oversold bounce. We're getting back to the 10-day moving average. What would matter on Coinbase is getting back above the 10-day moving average. Then I think we go up and test those highs around 275. If Bitcoin can continue to move higher, who knows what's going to be said Thursday night, then I think, we have a move up to 275. On the downside, the stop is 200. That's pretty easy to see. So you just look right there where the support was in May. As long as that holds, I think you could be speculative here. If you want to be more conservative, let it get back above the 10-day moving average first. But there's no question the stop is at 200. If we break below 200 there, would surprise me, but it could happen. But if we break below 200, then that's your stop. And Coinbase could be headed down towards 150. You can see here this move from 150 up to 200 was so vertical, so fast. There's nothing to hold it. It was in danger zone there back in May. It held. Can it do it again? If it doesn't, then I think you'd see 150 pretty quickly, maybe about as fast as you saw this move from 150 up to 200. But that's getting ahead. It's not even back to 200 yet, and it would have to break it for that. Today we're getting an oversold bounce, but can it get back above the 10-day moving average? Then you have a trade there, I think, on Coinbase. If you're long, I'd hold it as long as it stays above 200.
Very well. One more symbol for you before we head over to the platform to post the idea, and that's going to be IBM.
Another one we haven't looked at in a while, Big Blue. They used to call it. I don't know if they still use that reference or not. IBM has not been participating in all of the AI mania, if you will. It's just been kind of meandering around, doing its own thing. So we had this sideways move here underneath 170. It broke above it, went sideways again, came back down. We've been going sideways for a while here. It did try to make a break yesterday to to the upside here. We barely got that 1030 cross. You can see ever so slightly there. You want to see it continue that. But right now, at this point, we're trading below the 50-day. You want to see it get back above that on the close. Otherwise, then this close yesterday is meaningless. So can IBM close above that 50-day moving average today? And if so, then maybe we're getting ready to have a little more to the upside. Money will start to rotate. It has a little bit. There's been a lot of commentary about how thin the breadth has been in the markets. You know, big part of the rally has been the old Mag 7, et cetera, all that stuff. And that's not the healthiest of markets. The market's been going up, but you want wider breadth. And at some point, money will start to look to where are the stocks that have been underperforming. That's what happens during monetary rotation in the markets. And IBM, big company, maybe a little late to the party in the IM or in the AI world, but perhaps some money starts to move in here, and we start to see a move back at least to this 190 level here on IBM. So that would bring us up here to where we would have some pretty significant resistance. So thanks for asking about company that we hadn't looked at for a long time, and that could be one to watch. So I think I'd keep an eye on that. I think you're onto something, but I would want to see where the close is today. So I wouldn't do anything today, but if we close back above that 50-day moving average, then perhaps an entry tomorrow makes sense.
Yes, indeed. Lots of interesting charts today, and I see we are 3 minutes after the hour, so I know we all have to get back to the markets, yourself, myself, and everyone else out there joining us. So I won't take too much time here for everyone. Just going to show us the process for posting the idea on the platform. So you should be able to see my screen now. Awesome. Looks like you can. So this is a dashboard view, or the dashboard for the platform rather, and you can see an excerpt of all of the different features that you can click on for the more in-depth pages for each of these different sections. So for this session, again, I'll be speedy. I know we're running a little bit late on time. I like to point out the themes here. This just kind of helps jog the memory, or actually, and rather say it helps create, motivate some creativity or incentivize creativity in different sectors that you might not be looking at previously. If you're just kind of wondering where the most volatility is, where most people's heads are at, and what the most energy and interest is in, you can go through these different theme blocks and find different ideas from all of the community members that have posted that are associated with that theme. Another thing I think I showed on the last session was the different trust ranks that are associated with your individual account. So as you can see over here on the right near me, we have, this is just for an individual idea. My overall trust rank is 598. That's an average out of all the ideas I've posted since the inception of this platform. This one doesn't have any votes on it yet. I just posted this freshly yesterday. But to further elaborate on this, as we click into an idea here, we can agree or disagree up until the very day that it expires, or that it is closed if it's pending, hitting the target price that's initially set out or entered for the position. So it's important to note that if you agree with this position, say right now, and then about 2 months goes by and it looks like this is not looking so great, looking ugly, as it would say here, you can change your vote to disagree, and that would positively impact your trust rank. And so overall, your trust rank kind of holds your credibility and accountability throughout this platform. All right, so more detailed tutorials to come out on that. Sorry, go ahead, Rob.
I just want to jump in real quick on that. I think that's an important point that you just made. Sorry to interrupt you, but markets are changing all the time, and I've often said that's why I like Elliott waves so much. Is the markets consistently change? They're dynamic. They're not static. And Elliott wave is great because a lot of indicators are lagging indicators. The DMI is one of them, but the Elliott wave will be quick to relabel a pattern if something changes. So as Zach was describing, if you made an initial vote and then the pattern changes, your opinion may change. So it doesn't mean that you're stuck with your original view. If you're like, okay, things have changed, I have a different opinion now, you can go in and change your opinion based on what the market's doing. So I just thought that was a really important point to emphasize there, and you said it very well, Zach. So sorry again to interrupt you, but I just wanted to add my 2 cents into your commentary there.
No worries at all. Yeah, no, I'm glad you went back over it. As I mentioned before, I think it never hurts to go back over as a refresher for those that might be familiar with it, and of course those that are brand new that have never seen this before. So we'll go over to the idea section here and go ahead and post today's idea. As we'll see, we can hit this new idea button up here over here on the left toolbar, and we have the option for an idea or a post. Real quickly, some of you out there have probably heard me say this by now. I like to view a post as like a draft idea. This is essentially paper trading in general, as when you're creating an idea, you're setting a time frame and a target price. However, there is no actual capital at risk for the trade. It's overall in whole a paper trade, but you are still held to those guidelines, and your trust rank and everything else will be affected. The metrics will be impacted by whether or not your idea turns out to be successful or not. If you have an idea that you feel the criteria is just not fully met yet, you just need to see, maybe a confirmation day, as Rob said, or just something else play out for the pattern before you're ready to commit to an actual time frame. You would want to create it as a post, which would go into our discussion board, which I'll have to show on another session as we're running a bit late here. So for today, what we'll do, our idea, which was going to be for Microsoft, and I believe you said you were thinking it could break up to 475 based on the DMI, but what was that target price we'd ideally like to go with?
475. We'll put 475 as.
Yeah. You got it. So as you can see, should enter the symbol first. That's more important. All right, so I selected Microsoft there. There's now a target price for me to enter of 475, which shows that I'm obviously expecting to go long, going bullish on this position. The time frame on that, Rob?
Let's do 3 months. That kind of coincides with the wave 5 high right before the election.
Very well. All right, and so we can come back and make this idea nice and pretty right after this session's over and get it posted. And we encourage you all to interact, vote, comment on it, and we will be able to follow up on this come our next session. So I think that's a good overall demo for today, and I'll pass back over to you, Rob, to wrap things up.
Well, thanks, Zach. Great job as always. I know it's difficult to be multitasking and keeping aware of what everybody is asking while you're answering questions as well. So awesome job. And thanks everybody once again for spending some of your trading day with us. We appreciate it. We'll see where things close today, and all eyes will be on that PCE report on Friday. I'm sure we'll be talking about that with our subscribers Thursday night during the insiders meeting, which is for alert subscribers only. So thanks again. Have a great afternoon. Look forward to talking to you again soon. Take care, everybody.